Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Monday, October 15th. We're about halfway through the month. The market was about halfway wanting to go up and halfway wanting to go down today. Not a lot of tremendous activity in the market as far as going anywhere, but there's definitely a little bit of a fight as the week kicks off. Of course, as we all know, we are right in the middle of earnings season. You had Bank of America and Charles Schwab report here before today's open. Nothing really too dramatic happened with those stocks, but we're getting into it. Tomorrow morning, before tomorrow morning's open, as you can see here, we have 11 S&P companies, including names like Morgan Stanley, United Health, Goldman Sachs. So pretty big day for earnings in the market. My personal thoughts are I want to get through earnings to maybe simmer this market down one way or the other. Now maybe those thoughts will change, but that's kind of what I'm looking towards over the next couple of weeks as we get through the heavy earnings. Hopefully, we can gain some clarity in the market, because at least as of today, I don't think it has a whole lot of clarity on its own. Here we have the S&P 500. Interestingly enough, continues to really struggle at that little intraday resistance. Maybe we'll go to a 15-minute chart here. Has really started to establish some resistance, as you can kind of see here, just shy of 2780 from an intraday level. That can be something that we can keep an eye on from more of a day trading perspective. I don't think I would call that a swing trading entry point personally, but that can be a potential breakout zone on an intraday if that's kind of trading we're doing in this market. And this market is tough on a swing trade, but with all the day-to-day movement, it's not a bad day traders market, a lot of people feel. So that can be something we keep an eye on. But it's interesting, how it's really running into, and we've seen that before on both sides, right? Both as intraday support and resistance, and of course, it has to start somewhere. So that can be something we can keep an eye on as we move into the later part of this week. As we shift gears over to the NASDAQ, it was our worst performing index on the day. Really didn't do a whole heck of a lot. It kind of closed a little bit below that intraday high it made on Friday, a little bit above the 200-day moving average. I think you can look at this a couple of ways. Again, I think the smart play, we're in the middle of earnings season anyway. We've got a lot of volatility. I think the play is be super patient, super picky. But just kind of thinking about potential things that I could look to do. If I see some downward movement off of today's low breaking through that 200, that could be a potential selling opportunity. If I'm able to take out this high that we set up on Friday, that could be a potential buying opportunity. So whichever way it wants to go, I at least kind of have a general game plan. Now, I don't really think I'm going to do anything with that, but we'll see, right? I do like when I have these clear points of potential entries, because hey, just because I don't want to take it doesn't mean I can't recognize it, right? Similar situation to the S&P, not quite as pretty over on the Dow Jones, where it's kind of starting to establish more of an intraday resistance range, I guess is maybe how I would explain it. But really not a whole lot to see here today. Continue to hang above the 200. That's better than not hanging above the 200, but really very indecisive over in the Dow. Russell was our best performing index today. Of course, it's also, in my opinion, the ugliest index. Certainly wouldn't mind seeing it rally up a little bit, maybe working back into that old resistance, that breakout point for a potential shorting opportunity. Something I will be watching for. We can also watch how it develops in the next coming days to see if it puts together one of those little intraday floors for us as a potential breakdown, if that's our cup of tea. But certainly started to stop the bleeding today, but still, in my opinion, one ugly chart on the Russell. Not a whole lot. We did kind of get the ball rolling in the material sector today, but as you can kind of see here, closed really flat near the lows of the day. Another pretty ugly looking candle. I don't really think anything has changed technically to change my mind, at least when it comes to the material sector. Continues to be very, very weak. We have a little bit of resistance that we can look to in the form of Friday's high here as well. So that can be something that we can keep an eye on if we work into it. I'm not going to hold my breath, but hey, stranger things have happened than that. Energy really kind of struggling here today, but continues to hold that support level. And so this is a good thing for a couple of reasons. We talk about this a lot, but it's worth mentioning, specifically here with energy. If we want to play on this support bounce, I don't think anyone would argue that we have a strong confirmation candle today. But price-wise, we're at support, so we might be seeing that as early as tomorrow, right? If we want to play the bounce, we have a pretty solid risk to reward ratio because we know to set our exit strategy or stop loss just below this support level. So we should have a pretty favorable risk to reward ratio if we choose to want to play the support bounce. If we choose to potentially play a breakdown, if it breaks below the support, well, we know that is a bearish technical signal. It shouldn't break below this support from a bullish point of view. So if it does, that is a sell signal that we can at least think about taking advantage of. So I don't think we know which way it's going to play out today based off of what we see. We're at support, but we've seen no positive momentum. Let's keep an eye on how we react to that in the days to come. I think that can be very important, potentially. Looking over at the financials, very much like the materials, just kind of continues to hang around at that old support area. I think you could, this isn't a very straight line, but of course, me, and I am not a straight line drawer. There we go. We're close. We're close to breaking through that. Still very extended to the downside. Really didn't put up much of a fight at all here today. That's a pretty important level. And as we kind of look at this, and maybe it's a little easier to see it if we go to a weekly chart, past this support level, which we're currently sitting on and we have to respect, there really isn't much for a while. Our next real level of support, at least in my opinion, is way down here. So if that fails, and we're through some of the bank's earnings, and while maybe they weren't terrible, they certainly didn't set the world on fire, and certainly the market hasn't responded super positively to them. There's really not any great technical reason that we don't have a little more downward room. We obviously have to respect and see how we perform off of this support level. But if this fails, I'm not seeing any reason that we don't have a little more room to the downside before any hope is in sight. So still not a huge fan of the financials. Obviously, that support level is something we should all be keeping a very close eye on. Over in the industrials, started to fight back today. Much like a lot of things in the market, kind of sold off of the intraday highs. Still a pretty ugly chart, in my opinion. But we are starting to see at least a little bit of back and forth, which is interesting in some ways, because we're not really at much of a support zone. Support can form where it forms, but it's not like we're seeing on energy and financials where they have these support levels kind of holding them up. These guys, maybe you could argue they have some support levels, but I don't think anyone would argue they're major support levels. So I do find that interesting as I look at the industrial sector. I want to say it's a sign of strength, but I don't trust this market very much. So over in the technology sector, of course, the NASDAQ was a worst performer of the indexes and certainly trickled over into the technology ETF, coming down quite a bit. I think you could look at this really as a potential entry as early as tomorrow from a bearish point of view if we continue to build off of that seller's momentum, having created some resistance on Friday, shown that downward movement here today. I would expect volatility to stick around in the market, whether you like it or not. I don't think we can expect that it's going to go away, and that can be a pain for a lot of swing traders. But I do think that this is showing some pretty good weakness. And the great thing about it is again, we know it shouldn't go above Friday's high. Right? We know that should be what holds this thing down. If that takes that out, if I am short, that would be a pretty good signal that maybe that's not where I should be right now. Or if I'm thinking about going long, and again, that'd be pretty aggressive, and that's not how I'm feeling today, at least. It still would be a little bit of a buy signal. Breaking resistance is a buy signal, right? So certainly I remain bearish over there, at least until we take out that approximately 71 resistance. I would definitely want to see it close and not just a break. I usually want that, but I definitely want that in volatile situations. So interesting, a lot of weakness in my opinion over in tech right now. But of course, tech can move. No doubt about that. Over in staples, kind of interesting, although I didn't love the way that the day played out. Of course, we broke down, and we broke down hard last week, late last week, a little later than the overall market. And of course, started to rally up on Friday, continued that rally here into today. Nothing wrong with that, but it was a really, really big, strong rally. Ideally, what we want to see, at least if you're me in this situation, is to rally up, get a shorting opportunity up here, kind of on that kiss goodbye off of the fail of the support and the potential M pattern. With the way that today's price action, it really, really went up quite a bit. It did sell off fairly reasonably off of those intraday highs, but I'm going to continue to monitor that. I would like, and I don't know if I'm going to get it, but I would like to see this sector work up a little bit more into that resist or into that old support area for a potential shorting opportunity. We'll see if I get it. We'll have to, who knows in this market, right? But certainly interesting. Watch that wherever you find yourself. When you're looking at patterns like this, that old support can be a huge, huge entry point for bears on these type of patterns. So whether or not that's how you feel about the staple sector right now, that's fine. I'm okay with your personal opinion. I want you to have it. But pattern-wise, that's something you can keep an eye out for sure. Utilities started the day very strong. Again, much like a lot of things in the market, kind of sold off of the highs on the day. We had that big doji that formed here on Friday. It's a nice upward movement to get things going here today. I still overall think that utilities is a place where traders, or more maybe specifically investors, are going to be looking to put money during this uncertainty because it is more of a traditionally conservative, safe place, or whatever you want to call it. But as long as it holds this support level, I will give it a moderately bullish grade. The reason I don't love it is because, one, the market is pretty volatile, and I'm a cautious guy when it comes to that. And two, we have a ton of challenges at that 54.50 level of resistance. We've watched several of them together over the past few months. That's a big level. That's caused us a lot of trouble. We can debate why all we want, but the reality is my opinion's irrelevant. That has in fact happened. And so, we're really struggling there. A little more upward movement would make me feel a little bit better, but certainly if I'm looking at things in the utility sector, I'm keeping a very close eye if we approach that 54.50 over in the ETF, because that has just been basically a brick wall as of late. Moving over into our healthcare sector, really kind of didn't do much today, kind of held its own, didn't do anything to get me excited. I didn't get anything to think this is a great selling opportunity or anything like that. Overall, I still personally do have interest from a bullish point of view in this sector. Again, much like I probably said on Friday, just not tomorrow. So we are continuing to develop a little bit of back and forth. We are kind of off of that low that we set up on Thursday, but really haven't shown really, in my mind, any shift in momentum. I think we're seeing a lot of indecision here over in the sector, probably for the reasons that that I have. I still like it. I think a lot of people do. It's been a very strong, if not the strongest sector for a while, but it's still kind of nasty looking. So I'm not buying it, and I don't think I'm alone from that perspective. Looking over at our discretionary, really kind of held its own today as well, kind of just closing right above that 200-day moving average, working its way pretty much to Friday's high and using that as its intraday high here as well. Again, kind of like tech, if we see downward movement breaking today's low tomorrow, I do think some people will be looking at that as a bearish entry point. Whether or not you think you should is, of course, a decision you'll have to make. But some downward movement, yeah, I could see it. I definitely could. I wouldn't want to buy it there. That is for darn sure. Real estate had a pretty strong showing today. Again, much like utilities and many other things, gave up kind of at the intraday high and sold off. But very extended, still very ugly. It's becoming kind of interesting, and I'm not ready to be interested just yet, but we're starting to build, now 3 days of a little bit of an intraday floor. Maybe we'll go look at an hourly chart to kind of see how that has played out. It's not perfect, it's not great, but I do think it's something that we can keep an eye on as we go into the coming days. I wouldn't necessarily go short just because it broke that intraday floor or anything like that. But again, you guys, some of you know me pretty well. When these floors and ceilings develop, I love them because they're hard to break. And that gives me a signal if and when they do get broke. So I don't think, again, to me, this is still very bearish. I'm not necessarily bearish right now, still pretty extended to the downside, but I will be watching it. I would like to see a retracement, bearish retracement personally in the real estate sector. We'll see if I get it. I love asking for things because no harm can come of it, right? I get it or I don't. Never hurts to ask. Another very mixed day over in the communication services area as well. I think we're probably going to have to get through earnings to really get any clarity, market wide. But in this area, I think that maybe even more so. We continue to, of course, we're broken down, we're below support, all of that fun stuff. But we're still seeing quite a bit of back and forth on the intraday. To me, right now, that's kind of a tough area, as a whole to be trading because of that increased volatility market to boot. So that's where we find ourselves over in the sectors. As we move into our commodities, gold was able to carry over its break now for 3 days in a row. Did sell off of its highs, got up to about 1238, give or take, I believe, 1236. Sold off a little bit, but most importantly, at least to me, technically, it continues to close above 1220. To me, and I know I'm not alone, that's a line in the sand. A lot of people are waiting that for a buying opportunity. I know people personally who think that if you're in it, you should put your stop loss a little bit below 1220 and call it good. So as long as we're above that, I'll continue to have a bullish outlook on it. I get why people aren't flocking in droves though, because it's been ugly and it's been ugly for a long time. This is the first time we have to take this into, think about this for a minute. This is the first time since we broke down that we've actually broke resistance. We didn't, we failed and dropped. We failed and dropped. We failed and dropped. So we have to go back a heck of a long time to see the last time that gold was able to actually break resistance. That's why a lot of people think this is a good buying signal. But at the same time, we had to get here, and it was ugly how we got here, right? And so not everybody's going to be jumping in the first time it breaks resistance. And I certainly don't blame them for that. But personally, as long as we hold 1220, I will continue to have a bullish mindset, and I will certainly understand people who are taking a bullish position in that area, for sure. Moving over to silver, back and forth, showed a little upward movement here today. Closed off of the highs. Really not anything to see here that we haven't seen, yet. Certainly on Friday, closing above the 50 with the kind of 15 resistance level looming just ahead of us. Really, I think you have the same read here that you did on Friday. Either you're in it or open to being into it, working into 15, or you're like me and think you need to 15 to break to get the signal that you'd be looking for. So not really much change from a technical point of view over in silver today. I did see some nice upward movement, a little gap up on the yesterday on the natural gas futures, coming off of course, last week's end of week sell-off. Started to see some upward movement. This is one of those situations, if we see more upward movement tomorrow, while it's not textbook pretty by any means, it would be a pullback opportunity with some confirmation. Again, that's if we break today's high tomorrow, of course, type of stuff. But certainly, there's been a strong area. We know that when things get cooking, traders are prone to take any entry they can get, basically, as long as we hold this. Right now, again, while it wasn't, maybe textbook pretty, I now know that this, 315 approximately should be my support level. It should be my line in the sand, having seen that upward movement, particularly if we can get some upward movement here tomorrow. But that's kind of the support level I think we're going to be looking at in the short term right now over on natural gas. So whether it's doing anything or just watching to make sure that doesn't break, because that would be a little bit of a trend violation, something I will be keeping an eye out on. Of course, over in crude, early it started to move up, looked like a potential. We looked at it Friday, looked at a potential pullback. It started that upward movement here today, and certainly there were traders that got into it, took out Friday's high pretty early today, before kind of really closing flat. Pretty volatile session for crude. People are kind of watching that heavily right now. Didn't break support though, so while there was a lot of volatility, it didn't even break Friday's low. So, the folks who are aggressively moving in from a pullback point of view, I don't really think anything has changed today versus Friday. We had that upward movement. We continue to hold support. When you move in, first chance you get, so to speak, aggressively, well, sometimes it's going to pay off and sometimes it's not. And sometimes it's not going to be quite ready, not quite know what it wants to do, as we kind of saw here today. But support continues to hold. Overall, personally, as long as this is above 70, I will not really be too bearish. I would lean on the bullish side personally, above 70. But we can now kind of watch the support that's formed over the last couple of days. That should certainly be an area that's tempting to buyers, from a technical point of view. Certainly, we had a nice deep pullback on it, so I certainly understand why people were jumping into it. It's just a volatile session over there. And of course, lastly, we have our dollar, which really just can't seem to figure out what it wants to do. This one's tough. I don't like it. I didn't like the chart last week, and I don't like it right now. We broke. We pulled back to the breakout point. We've kind of followed through, but then we saw that nice candle on Friday as a potential turnaround candle. The problem that I saw with that is we're kind of right below that 95.50 that we've seen time and time again cause it some problems. I think, I'm not really all that interested personally, but I do think from a technical point of view, any buys are above 95.50 and not before that. I would want to make sure I was not only taking out, intraday highs, but I'd also want to make sure I was getting rid of that problematic area that we've seen for months now on the dollar index. So something we could be watching for. Certainly a little bit of support forming over the last several days. If that breaks, that would be, of course, a little bit of a short-term sell signal that we could watch for as well. So that is where we find ourselves. Stuff happened, but not a lot of things dramatically changed today, as it seems like traders are trying to find their footing. Now, I am, like I said earlier, kind of the school of thought that getting through earnings can help us one way or another. Earnings are terrible, it's going to continue to be bearish. Earnings are great, we're getting some sweet deals on stocks because of this pullback. I hope that's the way it plays out. I wouldn't be surprised if we see volatility stick around with us over the next couple of weeks as we work through earnings season. But of course, we'll have to see. I don't know the future any more than anybody else. So, ladies and gentlemen, as always, I thank you for your time. If you haven't already, be sure to subscribe to the Tackle Trading YouTube channel and hit that notification bell to be alerted to any new videos that we're doing over here. And be sure to follow us over at Tackle Trading on Twitter to keep up with some of the things that we're following during the course of the market day. If you enjoyed the market recap, it is also always very helpful and appreciated if you do give it a thumbs up to let us know we are continuing to stay on the right track. And with that, get out of here. Happy trading, and I will see you in the next one.